All right. Thank you, everybody, for tuning in here. So everyone's talking New Year's resolutions. It's like, okay, I'm going to exercise more. I'm going to lose weight. Blah blah blah. I get it. Well, you know what? My New Year's resolution is I'm going to be even more bitter and cynical than I already am. And the reason why I am doing this or saying this is the catalyst is that my wife and I got rid of our Optimum Online because it was just like so expensive. So we got Roku and Fubu and Frontier, and it's like you need to have a PhD to work this stuff. So anyway, they take my money. Let's see if we could take a look at some of these stocks. I mean, we're going to go in the broader markets and so forth, and I hope everyone's having a nice New Year's so far, safe and sober. All right. Anyway, here's Fubo. If this stuff was easier to operate, maybe they would make more money. It's like ridiculous. All right, anyway, all right, here's Fubo. All right, oversold, right? Sorry, I'm having a little trouble working my charts here. This is kind of an interesting observation here, or what should be an interesting observation. When you look at some of these momentum indicators, like for example, the RSI and the Bollinger Bands, are not on this chart, but RSI and Bollinger Bands are my two kind of go-tos. The default settings are the default settings. But sometimes if you optimize the settings, you'll have better luck. For example, if we look here at Fubo, right, the default settings are if it's below 30, it's oversold on this RSI indicator. But when I look at this stock, what I see is this particular stock, every stock has a personality. This particular stock is oversold before we get to 30. So let's just say we make the default, well, not the default setting, but let's just say we make the setting 35. A lot of newer traders don't understand this. This is what we call optimization. Now, let's just say we make the oversold sign at 35. Look at this, right? So before we didn't get these signals. Now we do. So when Fubo gets to 35 on the RSI indicator or the RSI momentum indicator, it's oversold. It was a good buying opportunity there. It was a good buying opportunity here. And now it's probably a good buying opportunity as well. If we go back to the default settings and make the lower range 30 or the lower band 30, you would have missed all those signals. So the bottom line is this: these things all come with default settings, and if you're trading a select or narrow group of things, it would be wise to maybe spend an hour or two just going through these and be like, all right, maybe there's a setting that works better. So if Fubo, I mean, I don't think I would do anything yet, but I don't know. Maybe down another 10 cents I would do something, but whatever. Screw you, Fubo. You make my life complicated. There's also Roku. This is another thing that has made my life very complicated. So I'm going to make sure I have the default settings in because that's always a good place to start. Let's see what's going on there. Now, this is a good example of one of the things we always talk about, the price level that was support converted into resistance. You see this all the time. People overthink technical analysis and they overthink trading. It's all just comes down to understanding what price levels are important, understanding what the trend is, understanding the momentum, and understanding the psychology. That's what this is all about. People make it too complicated. And a lot of this stuff I think is kind of embarrassing, frankly, like when people get into like Gann theory, Elliott wave. That stuff is all myths, man. No legitimate institutional trader that I've ever met in my 20 years as a legitimate institutional trader looks at Gann theory or Elliott wave. Speaking of science fiction, me and my wife, we always watch The Twilight Zone on New Year's Day. But look at this, right? The level that was resistance became support. Pretty simple. You don't need to be a chart guru to see that. Levels that were resistance can become support. Why? Well, has to do with seller's remorse. There are people that sell, and when the price goes lower, they're like, "Oh man, I'm smart. This is easy. I'm the next Steve Cohen." But then eventually, when the price blasts through that resistance and goes higher, a lot of these people are like, I made a mistake. I'm going to buy my shares back if I can do so at the same price I sold them at. So when the stock eventually, or if and eventually reverses back to the level that was resistance, these remorseful sellers place buy orders. And if there's enough, what does it do? It creates support at the level that was resistance. I mean, you can see it there. It's plain as day. All right. Now, before we go into the market, I just want to take a quick look at interest rates here. So we're just going to look at the 10-year yield. Yeah, I mean, we've had a little bit of a kind of a downward thing over the couple of days, but these things are, you know, still kind of going higher here. This could end up being bearish for equities. And if we get up to around 470, 475, we'll probably get some resistance. Now, you might be saying, well, Mark, how the hell can an interest rate hit resistance? Well, the reality is it's just the inverse of the bond. So if we go to the bond chart, we're talking about a bond that might be getting to support. Sometimes when things get to support, they rally because the buyers who created the support start to think like, oh, gee, I'm getting worried here. Another buyer might step ahead of me. And I know that the sellers are going to go to whoever is willing to pay the highest price. So I'm going to step up. So this is another reason why it's important to know where these important price levels are, because when markets get to them, they tend to move. And that's why we're here. So we can make money. When something is in the middle of a range and the momentum is neutral, from a trading point of view, there's probably not too much opportunity. So if something is overbought or oversold and at support or at resistance, there's a good chance it does what? Makes a tradable move. All right, let's go take a look at the S&P. And I want to go back to talking about price levels. Now look at this. This should really blow your minds. I mean, I don't know. Maybe I'm just too into this stuff. But the S&P 500 is worth, trillions and trillions and trillions of dollars. What happened here? Resistance became support. People sell, the price goes higher. A lot of the people that sold are like, if I could buy my shares back, I will at the same price I sold them at. So resistance became support. Here's another seller's remorse thing on the screen here. Why would the level that was support become support again? Well, there are people who sold at the bottom who regret doing so when the price blasted higher, like basically like the next day. They say if it gets back to my level, I'm going to buy my shares back. So seller's remorse can turn resistance into support. Seller's remorse can keep support intact. Some price levels are more important than others. It is not a coincidence that this is where the S&P found support. This price level, for whatever reason, and it's not even worth asking yourself why, because no one knows, around 580, 570 is important. I mean, look at this. We're talking about differences of pennies on a $585 security that is basically a derivative of a market that's worth trillions and trillions of dollars. Now, the S&P is made up of 11 sectors, and sometimes if we go through the sectors, we can get some insight. So, oversold, sitting on support, maybe there's a chance for some kind of a small bounce back, or there's a chance it's going to break down and go lower. Either way, there's going to be trading opportunities. Markets don't hang out at important price levels for too long. They either break them or they reverse. Now, let's look at some of the sectors. Biggest sector is technology. Yeah, I mean, there's some weakness here. All right, second biggest sector is financials. Let's look at that. I would say this is kind of neutral. But again, what do we see? The level that was resistance becomes support. This is a sector. All right. This thing trades 37 million shares a day. It's got almost $50 billion of assets under management. Here, the opening price back on October 17th was $47.68. Here, the opening price on December 20th, $47.70. We are talking about let me just make sure I got this right before I make a fool of myself. All right, there's a difference of 2 cents. No fundamental trader or analyst or investor could ever explain to you how this happens. But if you're a trader and you listen to what I try to teach you, you will understand why this stuff happens, and that will be your key to making money doing this. But anyway, right now in the middle of the range. All right, healthcare, let's take a quick look at that. Yeah, I mean, the healthcare sector looks kind of weak here. Here we have an example of what was support turning into resistance. This is buyer's remorse. People bought here and they thought that they were the next Steve Cohen or Jesse Livermore or insert great, trader here, whatever. But then when the price finally goes below their buy price, a lot of them are like, I made a mistake. And if I can get out of this at break even, I'm going to. I mean, think about it. You buy something at 10, it goes to 8. And then it's like, all right, well, if this goes back to 10 and I get out of break even, I'm going to. I speak to so many students and newer traders that experience this. And what I want to do is teach them how to recognize it on a chart. Look at that. What we just talked about, resistance becomes support. Support becomes support again. Well, now, anyway, we have support becoming resistance. Let's look at consumer discretionary. Ooh, look at that. That looks pretty weak. I'm trying to just kind of think, like, what do we need to look at on Thursday and Friday, which are probably going to be pretty slow. Oh, look at that. Industrials. Resistance became support. So we're sitting right on this precise level. This will be something to watch come Thursday and Friday. If the industrial sector starts to take the support out, that could be a sign that the S&P is going to take out the support we looked at. Remember, the S&P is the sum of its parts. And if we look at the parts, sometimes we can figure out what the S&P is going to do. And if we look at the individual sectors and we look at the stocks or the industries that are in the sectors, we can get insight into what the sector is going to do. So it's kind of like a top-down thing, right? You can look at the S&P, you can look at the sectors that make up the S&P, you can look at the industries that make up the sectors, and then you can look at the stocks that make up the industries. I mean, that's what we do, man. It's like the best traders let the markets tell them what to do. They don't guess. No one can figure out the markets. I've been doing this for a long time. I've literally traded for some of the greatest money managers in history. Gabelli, Cohen. They know they can't figure it out. They have reactionary attitudes. All right, here's consumer staples. There's been some real weakness in the materials sector. Wow, look at that. Man, that is like big time. So now there could be some trading ideas in the materials sector. So what's the next step? Well, let's go to look at the stocks that are in the materials sector. And we could just go to the fact sheet of the material sector ETF and look at the stocks that are in it. The ETF symbol is XLB, and we go to SSGA, State Street Global Advisors. They're who run this. So Lynn, Sherman-Williams, this is a sector that's dominated by one stock. There's one stock that is over 20% of a sector that's probably 30, 40, 50 stocks. Anyway, let's take a look at Lynn. Oh, I'll be back tomorrow with some concrete trading ideas for my paying subscribers. Hence, notice how I said paying. All right, so right here is a great trading idea. At least this is the way I see it. Resistance became support. Support became support again. As a matter of fact, I like this chart so much, I'm going to write it down in my notes for later. And what did we say, right? Things that are at important levels either reverse or break down. I mean, if you're an options trader, this would be the perfect opportunity for some kind of a straddle or strangle position, where you buy calls and puts, because this thing is going one way or the other. I would be very surprised if in a week from now, Lind is trading around 418. My guess is it's either going to be 425 or it's going to be 410, around those levels. This is a very attractive chart here if you're a trader, right? So you see what I just did? I found a sector that looked weak, and I looked at one of the stocks in the sector, and now I have some trading ideas. And it's not perfect because nothing is. But if you want to be successful, at least this is my opinion. I mean, people do this from different ways, but you know, you got to kind of just sit back and let the market tell you what you're doing. A lot of times, you know, it's like there isn't an idea. There's nothing that sticks out with you. One of my favorite quotes ever about the markets is Jesse Livermore. Now I'm paraphrasing, but he says, you know, Jesse Livermore was like one of these great traders back in the 1920s, and he says, I didn't make my money by being in the market. I made my money by being out of the market. And I think that's really interesting. And I think what he's saying or what he's alluding to is that I made my money because I was able to stay on the sidelines, not overtrade, not feel like I always need to be involved, and just wait for a good idea to come along. One of my favorite students has a very good expression. It's like you got to fish when the fish are biting. If the fish aren't biting, go do something else. If the fish are biting, meaning there's a stock that's going to move or it looks like the market's going to move, that's when you throw your line in there. All right. Oh man, I've been ranting for 16 minutes already. All right, everybody. If you have any questions, please feel free to contact me. Have a nice, happy new year. And yeah, I'll be back tomorrow with some concrete trading ideas, and I'll see you all then. Thanks, everyone.